So I mean, I guess there's not a lot of folks from the group here, so I'm just gonna pre-record and then send in the emails. That gives me more time to just back test and stuff. But what I wanted to talk about today was risk management because I think some people don't even understand that. And then we're gonna talk about just back testing. So back testing and looking for entries. We're gonna continue. We're continuing it from last week because last week we were talking about entries and all that other stuff and all that goody good other stuff. So uh, we'll just do the previous week. So we'll go back and back test like one of these pairs from last week was the what the starting of last week was the 17th. So we'll start the 18th of what's this? The 18th of January. I'm so stupid. But anyways, yeah, so we're gonna talk about risk management because a lot of people don't understand risk management. And I'm actually gonna type most of this stuff in. So we're gonna start with saying this is why it's important to risk 1 to 2% a trade and long term what it's Jesus how it's gonna affect you overall. So hypothetically, let's say hypothetically you got a $5,000 account, US dollar, and you got a 1 to 500 leverage. So 1 to 500. So that means for every standard you drop 50 pip would be $500. So it's a 1-to-1, so almost 1-to-1. Let's just say you're a horrible ass trader. Let's say you just suck at trading and you have a 30% win rate versus a 70% losing rate. So you have a 30% win rate and you have a 70% losing rate. Let's go back down. And let's say you're going after 1 to 5 risk to reward. You're targeting 5-to-1 moves. So your reward is 5 times your risk, and you're only risking about, let's do 1% right now, 1%, and you're risking 1%. And let's say you're not a heavy trader and you're taking 10 trades a month. So let's just say you're taking 10 trades a month. Now you can always calculate this and you'll be able to see like how much you would get with 20 trades a month or 40 trades a month. You can multiply it by a multiple of however trades you're taking a month. So let's say you're taking 10 trades a month. You have a $5,000 account. Your risk to reward is you're usually targeting 1 to 500, 1 to 5. But you suck. Like you just started. You have a 30% win rate, and you're losing 70% of the time, but you're risking 1%. What's up?
Where's 805?
805. What do you mean?
Grand Avenue.
811 Grand Avenue.
No, I said where's 805?
Right across the street.
What's that?
Because I used my freaking I used my current address and they put at 805 for the burritos.
Oh, send them just text the
I'm
person.
gonna try to put in the special instructions, but if not, I'm just gonna be outside because they're gonna tell me when they're pulling up.
Yeah.
See them.
So tell
that's what I'm just trying to figure out.
Yeah.
First. Somebody go pull up in their driver like, sorry, that's me.
So yeah, there's no one in the chat. It's kind of crazy. But anyways, so you're taking 10 trades a month, and your risk to reward is 5-to-1. So you're going after 5-to-1 trades. You look for the setup. Let's say we're just starting and you're just learning ICT and you're learning your entries and stuff, but you see a really good move and you're risking 1% for 5% basically is what you're going after. So your average win, give me 1 second. 1 second.
Oh, I could change it real quick. Actually, let me change it.
It's letting you change it now?
Yeah. Because they haven't even picked up the food yet.
Oh, Tess, you're trying to join a meeting? Are you gonna join or are you gonna
Or I am joining, I guess.
Yeah.
I just made a meeting.
Yeah, mute yourself. I'm gonna mute you. So Your average win would be $200.
What's the zip code?
50010.
You said 50010.
10, yes, correct. So your average win is $200, and then your average loss is $50. So you're averaging a $200 win, and you're losing about $50. So if you do the math, if you take 10 trades and you win 70% of them, that means 7 of your trades, the 7 losses you took, you would do 50 times 7. So 50 times 7 would be $350. And then your 3 wins that you took. Why is he hissing at her? Oliver, why are you hissing at her? Greedy ass away from the food. Anyways, the average wins you took would be $750 because your average win is about, $200. So there's my dollar sign. 750. So if you do the math, 750 minus, so your net profit equals $400. So you're averaging, even with the 30% losing rate, you're still averaging $400 a month. And that means you suck. Like, you just started trading and you can't save your life to trade for Jack. Like, you can't trade for Jack. You're just horrible at trading. And you're only risking 1%. That means you're risking $50 per trade. And your leverage is 1 to 500. That means you're averaging a $400 winning rate every month. $400 a month, that's rent for some people. So 10 trades, $400 a month. So let's say you take 40 trades. So you just multiply this by 4, a factor of 4, because you already know your win rates. So if you take 40 trades, you should average about 1,600 with 40 trades. So with 10 trades, you average $400. With 20 trades, you average $800. And then with 40 trades, you average 1,600. So I take about 40 trades a month because I trade twice a day, and I trade 5 times a day. So that's 10 times a week, and there's four weeks. So I'm averaging, if my win rate was 30% and my losing rate was 70%, I would still be able to keep average about 1,600 a month. Now imagine getting $1,600 a month with risking 1% of your trade. So you're risking $50 and you're targeting about $200 moves. You're bagging, you're already making 1,600. You're paying for your rent, you're paying for all the other stuff. So that's why it's important for people to understand risk management, literally risk management. Now let's say you're risking 2% a trade, right? So you're risking, instead of $200, you're risking $100. So now you're averaging $100. Listen, you need to stop biting this food,
Bro.
all right? Get out of here.
Bro, I said at some point I want a good job. The first person said sell plasma, and the second nigga said trap or scam. Like, what the fuck is up with y'all?
I'm dead.
Bro, I don't think I can donate plasma.
Bro, I cannot do that shit.
Get out of
Bro, I'm weak as shit when it comes to that kind of stuff.
I cannot
No
do
way
that
they
shit,
can
bro.
find
Bro,
blood out of me.
no.
Hold on, guys. I'm still on the meeting. So you're losing. Your average loss is $100. So your average loss is $100, and if you do the math, your average win is 1,500. So you're averaging, so you're risking 2%. So that's $100 of this $5,000 account, but you're targeting about a 1 to 5. So you're targeting about 50 pips. So let's say this is 50 pips. And you're risking 2%. So you're talking about 50 pips. Your lot size would be about a 0.2 or 2.0. So with oh, what's up? What's up? What's up, Dan? What up, Morgan? What up, Morgan?
Hey, Mesh.
So I'm actually going over just some risk management stuff and how important it is to risk, like with even a horrible win-losing percentage, you can still make a pretty good money. So I am recording this, so I was talking about what it means to like risk 1%. So hypothetically, let's say you start a $5,000 account, you have a 1 to 500 leverage, and let's just say you just started and you suck and you have a 30% win rate and a 70% losing rate. So meaning out of all the trades you take, you lose 70% of the time, but you win 30% of the time. You can still be profitable. I already talked about the 1% when you're risking 1%, but we're talking now about 2%. So if you're risking, let's say you take 10 trades a month. Now we'll calculate how much that would be if you take like 20 trades a month or 40 trades a month, hypothetically. So let's say you lose 30%, you win 30% of the time, lose 70% of the time, and you're always targeting 1 to 5. Your
Bro.
risk to reward is 5 to 1, right? So
She
you're
said she's gonna be here in 5 minutes.
5 minutes.
Yeah, it
Okay.
wouldn't let me update my address though.
Yeah, you should I mean, you got 5 minutes, but you should stand out there just in case.
Because they're gonna drop it off the front step. I'm like, hey, I'm over here. Sorry.
Yeah. But let's say you're going after 5 to 1s and you're taking 10 trades a month, right?
Is that house right there?
It will most likely be that house or the one next to
I'll
us.
just go check. 'Cause
Yeah.
I think it's down there when I was walking.
Yeah. Okay. Yeah. So let's say you average. Oh, hey, Jesus, he's in there. Yeah, Jesus, what's up? So I'm just going over some risk management stuff. So people can see for themselves how you can be profitable over the month. So in just 1 month. So, but I'm gonna get right back into just straight price action after this. We're gonna go over the previous week from for like EJ or one of these pairs or UCAD for the previous week. And just go over back tests and see where we could have capitalized on moves and stuff. But once again, so you're starting with $5,000. I already did the 1% trade risking. Now I'm at the 2%. You have a 30% win rate and a 70% losing rate. So you take 10 trades a month and you risk 2% per trade. So that means your average win is about 1,005. Your average loss is about $100. So with that being said, you lose 7 trades. If you lose 7 trades, so 100 times 7 is $700. And then if you win, oh no, this is your average profit is $500. Sorry, I'm tripping. Can't do math. So if you win 3 trades, it's 1,500. That's what I meant. So you do 1,500 minus that, your net profit would be about $750. $750. And that's literally with risking 2% per trade. So if you're risking 2% per trade and your net profit is $750 a month, you're paying your rent. You're paying rent with $750. You probably will have like, I mean, depending on where you're living, but some people, I mean, my rent's like $450, so I would be keeping like a nice $200 in my pocket every month if I can make this. And this is just with a $5,000 account. Imagine what a 20,000 can do, or when you get funded, like a $50,000 can do. Like you would be keeping in massive amounts of money, like with just 2%. Like it's insane how much you can make. And this is just with 10 trades. Now let's say with 20 trades, you would just multiply 750 times 2. So
It's at 811 State Street.
Grand Avenue. Is she retarded or something? Like, what's her issue? So you would average in 20 trades, you would keep 1,500 a month. Just 20 trade, risking 2% a trade. And then in 40 trades, that's what I do. I do 40 trades a month. So I take 40 trades a month. You would do 750 times 4. So you would bring in around $3,000 a month. And that's just risking 2% per trade. That's not even going crazy and trying to go like 5% or not. And you have a 30% win rate. So you have a 30% win rate and you're losing 70% of the time. You're bucking in about $3,000 a month just from 40 trades. So if that's me, I take 2 trades a day. That's about 10 trades a week. That's about 40 trades a month. So I'm averaging about $3,000 net profit every month. That's insane. People are not making $3,000 a month trading. Some people are not, but not with a 30% win rate. That just shows the importance of risk management, literally risk management. Like in the long run, you will make money with risk management. You will lose money if you try to go crazy in the markets. Literally, that's what people do not understand. Now let's do a something else. Let's say you're risking let's say your accuracy went up to 40% now. Let's say you got a little bit better and you're getting better and now you win 40% of your trades and you lose 60% of your trades. And you're still risking 2% and you're still going after 5 to 1 and you're still taking 10 trades a month. Now your average profit is still $500 and your average loss is still $100 because you're still risking 2%. And then you lose 6 of the trades you took now. So you're only losing $600. And now you're winning 4 of the trades that you took. So you're averaging about $2,000. So your net profit is now 1,400. So your net profit is now 1,400 with a 40% win rate. And that's just with 10 trades. Now, some people take 20 trades. That's about 1 trade a day. That's about 5 trades a week. So about 20 trades a month. So 20 trades will rack you in about 2,800. So 2,800 every month. And then 40 trades would rack you in about 14 times 3. I think that's what 30. 14 times 3. No, 14 times 4, sorry. Because you're doing 40 trades. 40 trades will rack you in $5,600 a month. And that's with a 40% win rate. That means you're winning. So if you take 10 trades, you're winning 4 of them and you're losing 6 of them. And that's just a week. So, and that's just a month, sorry. That is insane, literally insane. People don't understand the power of risk. And you can do this with any amount. Like imagine doing this is just with a $5,000 account. Now imagine if you're getting funded. So let's imagine you're getting funded. So let's say you want to do the $25,000 account and you still have a 1 to 500 leverage size. Your win rate is still 40% and you're risking 2%. You're going after 1 to 500s and you're still taking 10 trades a month. So if you do 2,500, 25,000, times 0.02. So give me a minute. 0.02. Is this correct? What is the percentage for oh yeah, I'm stupid. So you're losing $500 per trade, and then you're winning about 2,500 per trade. Yes, that's what it is. So your average win is about your average loss is $500. Your average win is 2,500. So if you take 6 losses, you lose about 3,600. Is he trying to bite you?
Yeah.
Stop. Stop biting people. And then your average win times 4 is 10,000. Yes, you see that number correctly. You're winning your average, the 4 wins you take will rack you in 10,000. And then if you take 20 trades, you know that.
Mesh.
Yeah.
Sorry, just a quick one. So it's more for me, like, so you say about risk.
Yes.
Do you calculate you calculate how do you calculate your lot size, or do you it
So
doesn't matter,
your lot
it could be
size,
a 10 standards, but you
yeah.
know,
So
the second it drops
this is
under that,
so this is a
you're out.
1 to 500. So this is a 1 to 500. So a
Yeah.
dollar, a standard would be $10, and then a 0.10 would be $1.
Oh, okay.
So-
And then you calculate your pips
Yep.
from there.
And
yeah?
then you can
Okay.
calculate your pips from that. So
Okay.
let's say you have a 25K
Makes sense.
account. 2% would be about since a dollar is 0.10, that means a 2.50 with risking 2% would be about your 2%. So
Okay.
or 1.50 to 250. One of those is if you hit a like a 25 pip stop loss would be your 2% that you lose, because
Okay.
that's around $500. Actually, we can do that right here. Actually, so let me go here. So 25, 1, 2, 3, and then so let's do 5%. Let's do 5%. 5%. 5%. Let me bring all of this down. Oh no, I'm doing 2%. Sorry, this isn't correct. This is 2%. I want to make sure this math is right as well. Make sure this is 2%. Did she bring it? Okay, good.
I just texted, I was like, hey, can you listen? Sorry. What the wrong I just said.
I'm dead.
Okay.
Let's do 2% real quick. Let me go back up. This is 2%. 2%. I don't know why I put 5%, but it's gonna fix here in a bit.
Is that math right? Because
Yeah, hold on. This doesn't look correct.
1% is 250, so it should be
Yeah.
500, not 50.
It
So
should
you
be
put
500.
0.02. The calculation is 0.02.
Yeah,
not
this isn't correct.
0.002.
0.02. Oh yeah, this is less than. Let me put.
Sorry, that's just my finance.
Yeah, I
brain.
know. You're right. You're right. Yeah, it's 0.02, not 0.002. Yeah, there we go. Okay, let me fix this. Sorry. Because 10% would be 0.1. Yeah. There we go. Let me go back up. There we go. I'll fix this here as well. 0.02. Yep, there we go. 0.02. Yep. Go. And these cats, they're about to get their own home. They were just hissing at each other. 2%. And then let's do 2% here. There we go. So 0.002. There we go. Yep, that's a 2 standard. It is a 2 standard. There we go. Okay. Let me drop it down. to 8 months.
33.
Okay, there we go. That's what I wanted to show. So if you're risking, if you hit a 25 pip stop loss and you're risking 2% of your trade, your standard is a $2 standard. So you would lose about 500. And that it goes back to this math right here. So your average loss is $500 and your average win is 2,500. That's if you're doing a 1 to 5 risk to reward ratio. So yeah, this is how this math comes in with this guy over here. So you would be dropping a 2 standard for your 2% trade. So if you're doing the math, if you're say you're well, yeah, so say if you want to get funded and you don't want to get you don't want to lose more than a 0.05% a day or something like that. So you can do this with anything. You can calculate this with anything. So let's say 2% is a bit aggressive on the stop loss. So let's say you want to do a 0.5%, right? So you want to do 0.5% just to like reduce your risk. So you want to do 0.5%. So then this would be a 0.01. That's when it becomes 0.5%. Yeah, because then it would be $25. 0.01. There we go. Yeah, I'll fix the other one too. So then you can calculate how long it would take you to reach that goal. So 0.01, 0.02, 0.01. There we go. So this is literally for that for whoever wants to get funded, like the 25K account. You can literally use this as like a ideal target. Let's go here and fix this as well. 0.0.
Oh my god. XLM literally just bounced off that daily train line on the hour.
Yeah.
So glad. Sorry, go on.
You're fine. You're fine. So
That
boom,
closes,
right there.
so that's gonna like pump so hard because it's broken out of that bullish triangle. So
Oh, you're talking about the LNM?
XLM, the Stellar,
XLM,
yeah.
sorry. Yeah. XLM.
Well,
Yeah, so literally in about if you're risking less than 1% a day, let me fix this. Yeah, so less than 1% a day, and you're bagging in, you're risking 0.5%. You're averaging about $25 losses. This is your lot size. So it'll take you about 1 month. That's 2 months, 3 months. 3 months. So it'll take you about 3 months to hit 10%, around 10%. Actually no, 25,000, 10% of that is 1, 2, 3 times 0.10. That's 2,500. So you'd be around 10% right around month 3, day 6. Looks like day 6, day 8. So month 3, day 8. That's if you're averaging. If your risk to reward is about 0.5%. Okay, yeah, I can do this for the 10% as well. I mean $100,000, $10,000. So 10, 1, 2, 3. So $10,000. Same thing. So if your risk based on the 1 to 500, you'd be doing these numbers. So I know you're trying to do 10% of that, so it'd be about $1,000. So you would reach 1,000 in about 3 months and 7 days. But that's just risking. That's only risking. So actually, yeah, let me go do the math real quick. So you're only risking. Let's say you're risking 0.5%, and you're say you still have these win rates. Let me just change this to 10,000. say you still have these win rates and you're risking 0.5%, and you still take 10%, 10 trades per month. So your average loss, let's go back. So your average loss is $10. Your average loss is $10, but your average win is still so 10 times 5. Your average win is $50. Average win is $50. This would be a 0.05 per trade, 0.04 per trade with a 1 to 400, 1 to 500. So I mean, it's around a 0.05 because what they're calculating also is like just like other stuff, but this is accurate. Do it with the 40% win rate. Yeah, that's what I'm doing with the 40% win rate. So, oh yeah, you're right. So if you're doing a 40% win rate and you're risking 0.05%, 0.505, yeah, 0.5%, the 6 trades you would lose $60, and then the 4 trades you win is $250. So you would bag out $250 per month. That's only if you took 10 trades, $250. Now, if you took 20 trades, you would bag out $500. And then if you do 40 trades, so you would bag $1,000. So you would hit your target goal in 1 month with a 0.0 with risking literally risking whatchamacallit. Yeah, I know it's 10 days minimum to trade. That means the 10 days minimum means so if you pass the trade, if you pass the trade in less than 10 days, you have to wait 10 days for you to get verified. That's what that minimum means. It doesn't mean that you have 10 days to hit the 1%, the 10%. That's not what it means. The minimum 10 days means if you hit your 10% before 10 days, you have to wait until those 10 days are up for you to get verified. But they give you a whole month. They give you a whole month to hit that 10%. So you have a whole month to hit the 10%, but let's say you do get that 10% before 10 days, you have to wait till those 10 days are out before you can get verified. That's what those 10 days means. It doesn't mean that they give you 10 days to hit 10%. That's way too aggressive. Oh yeah, that works out perfectly because in a month, so say if you take 2 trades a day and your 40% win rate and you're making $1,000, you should make around 1,000. You should be around your profit, your target around, you should be around your target in about 40 trades. And now that's just with a 40% win rate. Let's say you're 50-50, you're bagging in, you're winning 50% of your trades and losing 15%. And this is with literally a 0.5%. You're risking 0.5%. So your average loss is $10. Your average win is $50. So if you're winning 5 of your trades, if you're losing 5 of your trades, you're losing $50. If you're winning 5 of your trades, so 50. Oh yeah, this was not right. I did the math wrong. So it was supposed to be 50 times 4, which is 250. So this would be the correct one. So you would be at 1,000 with 50% win rate. The last one was supposed to be $200 because you're winning 4 of your trades. So I did the math wrong on that last one. But that's if you're taking 10 trades a month and you're averaging. So I mean, this is just with this lot size. So you can add multiple entries, but you have to keep in mind of the lot size. So like if you wanted to add 4 more entries and you know that 0.04, a 25 pip stop loss would be your 0.05%, you know that if you wanted to compound, you get in one position, you would only have to add a 0.03 or 3.01s, you know, you just do the math. So let's just say you got better, like you get better and you're still risking that. Or let's just say you're risking 1% now, like you're risking 1% per trade and you're at a 50-50 win rate and your risk to reward is still 1 to 5 and you're still taking 10% per trade. So 1% per trade, you'd be risking, I think 10, 1, 2, 3 times 0.01. Yeah, $100. Right? Yes, that is $100. So $500. So you would be risking $100 with your risk with risking 1%. You would risk $100 per trade, but you would be targeting $500 wins, and then your average loss would be $500, and your average win would be 2,500. So you can do 1% and hit your target goal in a month without even so if you took 20 trades, you would average $5,000. If you took 40 trades, you would average 10,000. So if you do the math, you don't need to be good at trading. You just need to have good risk management, because you can have a 30% win rate and still hit your target with that 10%. And that's what people don't understand. Like, you don't need to be good. They just need to know that you're a proper risk manager. Like, you know how to risk money and you're not taking stupid trades. Like, once you get better, your win rate starts to go up. My win rate is about 75 to almost 80. So if I'm doing this, I'm winning about 70% of the time. And so my percentage is much greater than what I could be risking a 0.02 with a 70% win rate. I would hit my target less than a month before that. So that's what people can't get their mind behind. They want to get to that target so quick that they forget that they're giving you a month. You can risk 1% per trade, take two trades a day, and literally make 10,000 a month with a $10,000 account. Literally, it's crazy. It's crazy. That's insane. So even with a 40% win rate, and you're taking 10 trades a month, you can still rack out money. Like, you can still rack out profits. So I think that's what people need to understand, is that they need to have risk management down first. Like, you need to have that down first. Your psychology cannot break risk management. That needs to be first priority. And then the second one is psychology, because that one will support your risk and everything else. And then that's when you start working on your entries and your exits. Because the trading part is the easiest part. Getting in and out is the easiest part. But the risk management, the psychology, that's what's going to mess you up in the long run. Because if you don't got those things down, it don't matter how good your entries are, you will eventually blow your account in the long run. So that's why I wanted to do this markup specifically for risk management, so people can see like how much. Let's just do $1,000. Let me do $1,000 real quick, because I'm pretty sure everyone can afford $1,000. So let's do $1,000. Let's say you're a 50%.
Another zero.
Oh, I did 100. I'm stupid. Let's say you're at 50%. You win 50% of the time and you lose 50% of the time. You're risking $10. So you're risking $10 per trade and $50 per trade. So this is the exact same thing. So you just take away the zero, take away the zero, zero, take away the zero. So if you're averaging a 50% win rate with $1,000 and you're risking 1%, dude, you can still make $1,000 a month with a 50-50 win rate. It's very doable, risking 10%. And here's what 10% is for here's 1% for $1,000. So let's do $1,000 real quick. This is going to be your lot size for $1,000. So 1%. Let me go 0.0%. 1.0%. and this is 1%. So it's not showing now, but it's supposed to be. This isn't correct. This is not correct. That was a 0.05%. 1% would be 0.01. Correct. That's it. There we go. So let me scroll down. So hypothetically, let's say you started $1,000. Like you want to start with $1,000, and you're okay. You win 50% of the time, and you lose 50% of the time. So let's do a 0.01. And this is crazy because you can still make good money. You can still make good money. Look at where you're at in about 8 months. This is 8 months. You started with $1,000. In 8 months, you'll be at 10 grand. But let's go back up and look at this.
I don't want to jump in here, but like, you know, for example, like and I know it's a sore subject, but like busy or drop like a 0.01 on like say NAS or something, or
Yes.
like on like a $500 account, and all of a sudden it's at like 50 grand or something.
Yeah.
I don't understand how they do that though.
Yeah,
you know?
the
I
thing
don't
is
understand.
because they have money to burn like that. So some people, I mean, if I want to have some fun sometimes, and I'm really good at trading, like my win rate's 80%, I can go in and start like $100 account just for fun because I'm not afraid to blow $100. Some people aren't afraid to blow $500 and then drop a standard on that or 2 standards and then just let it grow. Because I know I have an 80% win rate. The reason why they're doing that is because they're confident in their trades and they know what they're doing. So if you have a 70% win rate, and you can do whatever you want because you're above that average. Even with a 50, you can be a bit aggressive with a 50% win rate. And the way you can check what your win rates is my FX book. You can track your trades. You can track all the trades you've taken and everything. Anyways, this is with $1,000. I'm sure everyone can start 1,000. You're fine, man. Anyone can start $1,000 in about a month, $300. I mean, that's nothing, but that's rent. In another month, 1,790. Now, as the months keep going on, in about 8 months, you'll be at 10 grand from where you were. That's 8 months. Who's making 10 grand in 8 months, or 9 grand in 8 months from a regular job? And this is from a side hustle, and you're only risking 1% per trade. That's literally 1% per trade. You're taking about and this isn't even, this is just hypothetically, this is hypothetically you're making this is about 25 trades a month. So about 25 to 30 trades you're making around. That's if you're taking about 15 to 20 trades, you're making about $300 a month. That's insane. So if you're taking 40 trades, say like me, I take 2 trades a day. You're making about 1,000 a month. So just risking 1%, and your win rate is about 50-50. So you can still make money. It's just that people want to see the money quick. They want to see the money right away. You know, they don't want to have to risk a lot of stuff, and that's why we have these tools to have proper risk. Like we're not stupid. We know that this thing is a long-term game. It'll pay out. Trust me, it'll pay out if you actually just go with the risk, because eventually you'll get so better at spotting stuff. Your win rate will go from 50 to 60, 70. Before you know it, you're at 80% win rate. And then you can start risking a little bit more, but you don't ever want to go over 3%. And before you know it, you're scaling quickly because you're getting so good at it. And that's just what I wanted to go over for now. But I'm going to definitely be stressing risk and how important it is, like in the long run, because folks don't understand. You can still make good money with 1% to 2% risk. And that's just risking 1 to 10% to 2%. I think 3% is a bit risky, but let's say 2%. Let's say you're risking 2% of your trades. So you're about $20, and then you're winning about $100. So you win. Your average win is about $100. Your average loss is about $20. So 20 times 5 is $100, and then 100 times 5 is $500. So your net profit is about $400, and then so you're racking in about 800 every 20 trades, and then 400 times 4 is 1,600. So even with 2%, you're racking in 1,600. Because me, I would be racking in 1,600 a month. 1,600 a month covers everything for me, my rent, my car, everything, literally. And that's only risking 2% a trade. Literally, it's insane. It's literally insane. And I started with $1,000, and this is a month. So that's why it's important for people to understand risk management. And then if you really want to know how many pips, how many lot sizes you can drop, let's do the 2%. So let's do 2% here. And you can, this is why I made this sheet for you guys, so you guys can physically see how much you can risk and everything. So here's that 2%. Let me do this one over here too. 2%. So 2%. Scroll down. Two percent. Let's go. Look at 8 months. We're just risking 2%. 8 months. 8 months, you're at 100 grand. But let's be realistic here. Let's just be realistic. And then I'll change this to 0.02.
Yeah, my break or so.
Actually, you can be realistic and get 100 bands in 8 months. No joke. You can actually do that with 2% risk, starting at $1,000. No joke. You can do that. It's not hard. It's not hard. It's not hard. If you're risking 2% per trade in about a month, you'll be at 1,700. That's $700 in that month. Next month, you'll be at almost you'll be at 3,000 something. That's just risking 2%. You're risking $20 per trade with a 0.08. That's what people don't understand. You're risking a 0.08 and you're averaging a 1 to 500. Like, come on. It's not that hard. People can do this. I think you guys, I'm not gonna say point fingers, but most of you guys have a 50-50 win rate. You're around that. And you can do this. You can capitalize this. You see the $1,000, you're like, oh man, that's too small. That's too small. No, it's not. It's literally with this proper risk, you can take. You're telling me you can take. That means you can take. If you take 40 trades, 20 trades that you took that month, you lost it, and the 20 other trades you took, you won it. You're gonna be averaging about 1,600 a month. Who's averaging 1,600 a month on a side hustle? Well, I mean, this ain't really a side hustle. This will eventually be your career, because once you do take your account up to like $5 grand or something. So once you get month 3, you're at $5 grand. You're risking 2%. You can be a little bit more like deadly with your entries because you're so good and you're trained now, and you're on month 3. You're gonna be deadly. Like, you're just gonna be deadly as hell because you already know what you're going after. Let's actually start. Let's do the 5%. Let's say you're at 5,000 now, so you can automatically change this to $5,000. So let's go 5,000. You're risking 2%.
Yeah, we should do this.
Yeah.
Trying to? Gotta make it.
I can make it.
You're risking 2%. That's $500. I mean, that's $100 per trade. You're averaging about 500. So $500 per win. In about a month, you'll be at 8 grand. A month, 8 grand. So just by starting $1,000 in about 3 months, you'll be at 5 grand, and then literally the month later, you'll be at 8 grand just by winning 50% of your trades and losing 50% of your trades, and only risking 2%. So you literally don't need to be dropping these lot sizes. Don't be letting these people fool you, because they drop in heavy lot sizes, and you see it. You're like, oh, dude, these guys are making so much money. These guys are making a lot of money. You don't need to do that. You don't need to do that. Stick with your plan, because in the long run, you will be making like bank, because once you get to month 8 and you're at 50 something thousand, 100 something thousand, people are like, how the hell did you do that? Risk management, risking 2% per trade. So it's the psychology and keeping on track with your with what you have planned. What's gonna mess you up is you. You're gonna be the one messing you up if you decide to get risky, and you gotta keep it a band. So hypothetically, so I have a 20K account, live account. Let's say I have a $2,000 live account. I'm risking about so I'll do a 0.16. If I hit a 25 pip stop loss, I would lose $40. $40. In about literally a month, with just risking 2%, I will be at 3,500. Or wait, this isn't right. This is $2,000. I'm at 20,000. There we go. So with the 1.60, I feel like even 2% a bit aggressive, because in a month I'll be at 35,000. I'll do more like a 0.5% with a 20. Anything over like $10,000, I'm doing around 1%, a 0.5 to 1% on my risk. Because even losing $400 with a $20,000 account is too much for me. Like, nah, that's too much. I'll be around.
This is just based on like every trade winning, though, right?
Correct. Give me a second. Hey. We're actually on a Zoom call, but you guys are fine. You guys are fine.
Put a new shower head on us.
Okay, that's fine. But yeah, so you can still risk 2% and make like, you don't need to be risking your whole bank account to make money in the markets. Like, it's stupid. With a 50-50 win rate, like, you can still make okay money. Like, you don't need to be risking a lot. I just showed you guys with $1,000, you can, even if you suck, like with a 50% win rate, you can still make like $400 a month with 10 trades, risking 2%. So that's what I wanted to go over. We'll just go right into the previous week. We're gonna go. So last week was a bit hectic. So let's go. What pairs? Like, we can look at 2 pairs from the previous week just to go over price action and stuff. So we'll be looking at the dollar index as well and everything. So I'm just gonna jump to GJ real quick. Last week was the 18th. Actually, we can start at the 25th. So let's just start. I'll start from the 25th of January. So let me slide this down. January 25th, 2021. So this was the previous week. And then I'll start it here. So this was that previous week that we had, and then we'll go over some ICT concepts and everything. So from here, we had this high. We saw that previous week, we this is where we started at on Monday from that previous week. On Monday. So looking at this, we had highs right here. So usually during highs, we have the liquidity runs for the possibility of liquidity runs. It's currently, let me see. It's currently 2 p.m. or this is 4 p.m. 4 p.m. January 22nd. So I think that is the 22nd that was Friday. Yeah, so January 22nd. Let me let it go to, there's the 24th, and that day started, the 25th was, and no. Okay, yeah, so now it's the 25th. So it's Monday. So I don't trade Sundays. The market opens Sundays. I don't trade Sundays. It's the 25th. I'm looking for my entry. So we know that it looks like it's appearing to do a run on liquidity. It is currently 1 a.m., 2 a.m., 3 a.m. 3 a.m. we did see that move down. So this was that last up move before this drop. So it's 3 a.m. We know that since this was that last up move before this drop, this guy's the order block right here. We did have this run on liquidity. It was about 8 pips. So I feel this was a Judas swing, literally a Judas swing. There might be a short-term goal here for this fair value gap right here. So I wouldn't be in this trade just because this isn't enough pips for me to even feed off of. It's 13 pips. That could be my stop loss. So I would not be in this trade. And there's that, see how I filled that bad guy in? I would wait till 7 a.m. because 13 pips is nothing to me. I want like 50 pip moves max. So it's 6 a.m., 7 a.m. So it's 7 a.m. 23 pips. I may take that. I mean, I can't take that. I would be shorting here. My stop loss would be, so here's that last up move before this drop. Let's delete this. This is that 50%. So the moment this closes above this, I'm out the trade. But I am targeting right here. There's that fair value. Let's watch it. So it's 7 a.m. It's currently 8, 9, 10. There we go. TP hit. So our TP was hit around 11 a.m. I would call that a good day and wait for the next day. So, and that's literally how I focus my trades. I look at short-term goals, but I'm keeping long-term goals in mind as well. So keep talking about long-term goals. I know that there's liquidity built up under here. Looking at the daily. So I always go from the daily 4-hour and then I go hourly. So looking at the daily, I know that we had this massive move here. What do we have under here? Well, under here we have sell stops where there's liquidity built down there. And then even right here, we have this fair value gap right there on the daily. So we may be targeting this fair value gap. We saw it was touched once. They may be looking to touch it again. We'll see. But if we do break this low, we will be targeting this fair value gap down here. So that's on the daily note. Now the 4-hour, we saw, this is what I'm seeing right here. So we did get in that move. We got our 25 pip move. Here's that 4-hour. So once again, I remember how I said you always want to look at what was the previous move. So this move here was that previous up move and then the drop. And then this was that retest into that move. Specifically this guy here. Now, if you look at this, where does it go? Right there at the mean threshold. So let's actually go there. let's go look at that main threshold real quick. Notice how it came into this main threshold and it closed under. And it does that for a reason because most of the volume of these cells are actually within 50% under this body. So if it closes, if I'm looking at this 4 hour, and usually what I do is I give it 2 hours. I give it half the time to close under. So if I have a 4 hour mean threshold, I'm giving it 2 hours to stay under this. Once it stays under, I'm confirmed the trade. So, I mean, I could have gotten in a sell around, once I saw this up move, that's 1 hour, 2 hours after the second hour, and it's closed under this 4 hour mean threshold right here. This guy right here. That's a confirmation to hold. So technically, I mean, I could have hold my trade from here. My TP would have then been, if I'm looking at the 1 hour. So I have the short term going in mind. My TP would have been here. So TP would have been here. So that's 38 pips. And I would take that realistically if we were talking. So what's happening next? This move. This is the next move. What are we looking at here? Here's the fair value gap on that 4 hour. Now, the thing about the 4 hour is the fair value gaps is really, the wicks are really respected on the fair value gaps. So on the hourly, I want to see price before the next day. I want to see price come here, literally play in this area. I don't want it to fill in yet because if it fills in, there's a high probability we may be going back to this main threshold. So let's go back and look at this. It is currently 11 a.m. I'm out to trade, so I'm gonna let the day go by. 12, 1, 2, 3, 4, 5, 6. Notice how it goes. If it plays. It finally fills it in. It's about 6 p.m. 7, 8, 9. Look at that. It rejected it. It's 9 o'clock p.m. 10, 11, 12, 1, 2, 3. So I get in twice a day. I get in during London or New York. So I mean, some people can get in Asian. I don't like getting in Asian because there's a possibility of just volatility, unnecessary volatility. So remember how we had that long-term 4 hour goal, which was to fill in this guy here? It came right down. So it was a nice 80 pip move. And then here's that fair value. Notice how it filled it in once, twice. So usually if I have a 4 hour fair value gap, like I said, I give it 2 hours. But if one candle closes here, so let's go back here. So I give it 2 hours. So it's from here, starting here, 1 hour, 2 hour, it closed under. That's fine, but it's 1 p.m. I'm gonna wait till 7. I'll wait till 6 or 7. So when the market opens, I'll wait till 8 p.m. My entry would have been right here. And then I would have targeted it the 4 hour target, which was this fair value gap right here. And then eventually, see right here, this is that daily fair value. Notice how it came down. It may come down a little bit more before we go up, but it came down. It didn't touch it. It just filled this in. We filled in this fair value on the 4 hour. That's why it's important to understand like bigger time frames, because once you understand them, you know what the lower time frames are doing or what you want to see out of the lower time frames before you start getting in these trades. So you're no longer guessing, you're just waiting for a price to tell you, oh, okay, that's the confirmation I needed. This is when I need to get in. So the overall goal was this 80 pip move, but we weren't getting in. I wasn't getting in until I saw that we were bearish. So I could have held this. Usually I say if you're 30 pips, 20 pips in profit. So for instance, we got in here, we would have gotten out here, 20 pips. I would have stayed in until, and this fair value was held, and then I would have targeted the 4 hour target. That's 4 hour target. Now, so say if you have the $1,000 and you're averaging about $20 a loss, and you're targeting 80 pips. This is what I mean by you will make more than what you're trying to target, because your risk is what is you're protecting, but you're going to be profiting more than what you were targeting. You guys can eat without me. Actually, I'm going to open this. Where's the burrito? I got 3 burritos. One for you. It's chicken. It's a chicken burrito. I didn't get pork. I know you don't like pork, obviously. You know how to mess with pork either, bro. Sorry, guys. I'm trying to feed these guys here. But yeah, so you have 4-hour targets. My targets are on a 4-hour, but I'm looking at it from an hourly perspective. Notice how I came here. It's my first TP. This is my first TP right here on an hourly right there. Right here would have been my first TP. Go back. Jeez, I hate when you move this, it doesn't fix it. It fixes itself. So this would have been my first TP up here, 40 pips. So if I knew I meant 40 pips in profit, that guy hit around 10 a.m. I would have held it. If it doesn't break above this 4-hour guy, I'm good. I'm staying in this trade until the next day. So the next day came around. We actually hit our 4-hour target down here, this fair value gap right here. And then usually what I do is I just delete everything, and then I go on the daily. So I know this is kind of cheating, but I noticed that we came down and we didn't hit this guy here. We didn't hit this fair value gap where we want it. And so I go on a 4-hour. I'm like, okay, so it's currently 3 a.m. We hit our target, our 4-hour target. We hit our 4-hour target. It's currently 3 a.m. I want to see if this is a short-term sell or long-term buy. Let me get a piece of this burrito real quick. Is it good? Yeah, it's fire, isn't it? So it's 3 a.m. I'm looking for my entries. I have a long-term goal, this 4-hour guy right here. Actually, I mean right here, really, because this is included in that up move. So from here to here is that fair value gap. So my long-term goal is this target right here. So I want to fill in this guy. It's 3 a.m. and I see there's this last down move here. This last down move, it's majority wick. I mean, it's majority body. So here's the main threshold. If it breaks below this main threshold, I'm out the trade. So boom. My entry would have been probably if this is the 3 let's see how this is why you got to get your risk to reward also. It's about 30 28 30 pips. So yeah, my entry would have been here. My target would have been right here. 27 pips. It's less than 1%. I wouldn't be taking this trade. Remember how we're going after 1 to 5 trades? So my entry would have actually been here. My target would have been here. It's still a 1 trade. I don't know if I can go in the 30-minute. I don't know if they're gonna let me. Oh yes, they let me. Thank you. They let me because this was a week ago. So here's that last down move. Here's a 50%. What I would like to see is for it to come down to here, and then my entry would have been here. My stop loss, literally 13 pips. TP here. So it's a nice 1 to 3. So that means if it's a 1 to 3, that means I need to get a 1 to 2 next to fill my daily goal, you know? So you're targeting the 1 to 5. You want to target 1 to 5 a day. So my entry's there. and it didn't hit. So it didn't go up there. It didn't come, my entry didn't hit. So it's 5 a.m. 6, 7. It didn't hit. It hit the TP. I missed a trade. That's fine. That's fine. I missed that trade. It did not come back down. Didn't even come down to here either. It's just bought straight up. Sometimes you will miss trades like this. So it's kind of cheating, but I know that our 4-hour goal was hit. This was the other target right here. And it hit it. So let's go into hourly real quick. So it's here. I wouldn't even mess with this day because this isn't enough pips. 20 pips, I mean, I could take it. This is that last down move. This big guy right here is the last down move. Here's that order block right here. We can capitalize off that move. It's currently 6 a.m. Steven tearing up that burrito. This man going to town. So here's my entry. I do see my entry. Boom. My target would have been here. Stop loss would have been slightly below the body of these. I'll be mad if I miss. Look at that. So I missed the entry again. So that's 2 days. That's a day without trading. I would have been pissed. I would just be out. So the next day I would be targeting a 10-to-1 move. So like if I get a 1-to-5 in London, I would want a 1-to-5 during New York. And that's just planning around your trades just to see what you're targeting and what you're going after. So we broke this high. We didn't come down here at all. So I know that this guy here was at low today right here. So if you look at this, let's go to the 1 hour. So yeah, so this was at 3 a.m. exactly at 3 a.m. So if you actually wanted to get in, let's say you wanted to get in at literally at this, you come over here. Here's that down move, the last down move. This guy right here from here to here, right? So from here to here, that's the last down move. Look at that 50%. Look at how it was touched. That's the mean threshold. So this big old candle, the mean threshold is right here. I would have gotten in here. I mean, you can't really tell. So let's say you didn't get in here, right? You didn't get in here. My next entry would have been the close of this, because if this was legit, if only this would let me see. Oh, it lets me. Can I give him the 5-minute too? Yes, it lets me. Okay, let me show you guys. So I know that this is that 50%, right? This is that 50% candle right here of that guy. So if I'm watching this, I can still get in this trade. I can still get in this if I know the move. So it's the same thing, just on a lower time frame. So let's say you missed your entry and it's currently about 315, 320. You got the 3 moves. You see it right there. Here's the move. Here's that down move right there. Here's a mean threshold right here. Now I wouldn't trust a 5-minute mean threshold, but just to show. Where would my entry be? Right here. This is it right here. So my entry would have been right here at the top of this black candle here. My stop loss is slightly below this body. Now I've reduced my risk. I have now reduced my risk to only 7 pips. What would my TP be? My TP would be the same thing. Same thing. So let's go on the hourly. Same thing. And now your risk to reward is minimized, and now you're getting 1 to 11 trades, because all you're doing is just doing the same thing on the smaller time frames. And now you're targeting like short-term goals, but you understand your long-term objectives. So we knew that we were trying to target. So this was our first target right here. Here's that last up move. So here's the last up move right here. Here's a fair value. That's on the 1 hour. I know that this guy was going to get filled in. I know that he was going to get filled in. So the overall move the target was here. And the overall objective though is up here, this mean threshold, this fair value right here, not mean threshold, sorry. There's a fair price, fair value gap right there. And then on the 1 hour, you can't see it though. You can't see it. On the 1 hour, you can see the fair value, fair price right here, or the fair value gap right here. But on the 4 hour, it looks like that. It looks, I would be targeting here on the 4 hour, but if I really want to specifically get in, I would get in on the 1 hour short-term target. And you're getting 1 to 8, you're getting 1 to now you're getting 1 to 10 moves because you know what you're looking at, you're looking for. You're getting in at the low of the day. Say 3 a.m. hit, so it's 3 a.m. You're on a 5-minute chart. You know you're at a 50% order block. Oh, you're at a 50% order block, the mean threshold. You're anticipating this buy. You wait for it 5, 10, 15 minutes later, you get this break up. You get the break at 305, 310, 325, 310, and then 320, I would look to get in. And I see this candle here, boom, my entry's right here, my stop loss is right here, 7 pips, stop loss. And I'm still targeting the hourly, but this is 80 pip move. This is an 80 pip move. And this isn't even 8:05 a.m. yet. This is still New York time. I can still mitigate off this move. I can still target this move. Like I can still finish this move. Where would my short term go? My other finish, where would I be finishing at? Right here. I'll be filling this guy, this fair value gap up. So let's just let it finish, let it retest. So look at that. So it's around 9. It's not even done yet. Let's let it finish. Look at that. Look at that. So around 10:45 a.m., you've hit both of your targets. You're short. Oh, go back. You hit a 98 pip move off the 5 minute. You can do this every day. You can literally do this every single day. Like you can catch moves like this every single day with 5 pip, 10 pip stop losses, targeting short-term goals while keeping in mind of long-term objectives. So let's clear everything. We got our, basically that's like a 1 to 20. Let's look at our daily. Looking at the daily, we see these highs look like they want to get liquidated. So keep in mind, we've only been trading, it's only what? January 26th, that's what? Tuesday. It's only Tuesday. We had so yesterday we missed 2 moves. Monday we missed 2 moves. Tuesday we came back with a 1 to 20 pip move. So if you're looking at this, here's what are we targeting up here? So here's a fair value gap right here. Remember how I say the daily, the wick is very important because that's where a bunch of the volume is on the hourly. So if this is in fact a buy, we may see a little we may see a Judas swing push up, and then if it doesn't hit that, we could see a rejection right away into that. But we're gonna go on the hourly. We had these highs right here. These highs were liquidated. It's only 10 a.m. Let's let it finish. 11, 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's about 10 p.m. 11, midnight. So it's now midnight. 1 a.m., 2 a.m., 3 a.m. So it's 3 a.m. It's 5 a.m. now. It looks, I would be a bit suspicious of this just because I'm seeing this. I'm like, okay, it's 5 a.m. It is currently Wednesday. It's 5 a.m. It is Wednesday, the 27th. And I'm seeing this. I'm like, okay, so I can go on a 5-minute chart. So let's go on the 5-minute chart and see what it's doing. You can zoom in on a 5-minute chart and do this to see where your entries are so you can get a better entry. So I know that price came down. We retested. We rejected. We look like we're bullish. So it's 5 a.m. I mean, I would have been getting in around 3 after I saw this. So let's go back here real quick. So what do we see here? Here's that down move before the buy. So this move right here, starting from here to here, here's that 50% right there. Boom. It's current. This is so 23. This is 3 a.m. 3 a.m. I would be looking for entries. Here's the 1 hour. This is that last move. I would be looking for where my entries would be. I would be looking for a buy, and I would be targeting this guy up here because this is that. We may see a Judas swing, 20 pips above this. So it would be a nice 20, 30 pip run. So about here, maybe the target. We go into 30 minutes. 30-minute, it looks a bit confusing. Here was that up move before the drop. If I'm looking at this, it's 3 a.m. and I saw this drop and I'm like, okay, so I need this last up move. Where does the up move start? If you're looking at this, you always want to start from where it previously engulfed the down move. So it started here. There's a 50% right there. So this would be the hourly mean threshold. So the next candle, this next candle, I want it to close below this. It doesn't close below that. It's currently 5 a.m. I'm going to let one more. It closed above. So that's the confirmation that I needed to get in this trade for the long. So I would be going long. Musa, I'm going to mute you. Oh, you already muted yourself. So I'll be going long from here. My stop loss will be under this. 4 pips, not even. And then my TP would be up here, 17 pips. So it's about 6 a.m. I'm out to trade. So if it doesn't go up to there by 7 a.m., like before New York time, I'm out to trade. There's no point of being in it. Then you're just wasting profit. So it's about 7 a.m. I'm looking for another entry. So I took a loss, like 4 pips. That's nothing. Give me a second. 3 pip loss is nothing because you're understanding. So it appears that we have another short-term objective. Oh, I didn't want to cheat, but we did have a short-term objective on this on the hourly right here. So from here to here, this is all fair value. And we know that on the hourly, it usually gets filled. So it gets filled to the T right there. I'm going to cancel this. I'm going to cancel this. Let me go on the 15, back to the 5 minute. So my target's down here, which is that hourly fair value gap that was filled in right here, that we want to be filled in. It's currently 6:20 a.m. I'm gonna wait till 7. Okay, here's that up move, the last up move, starting from here to here. So from this guy to this guy, here's a 50%. And this is on a 5 minute, like you can do this with anything. There we go. That was the move that I wanted to see. It's currently 6:30 a.m. That was the drop that I was waiting. And I was waiting for this on a 5 minute chart. My entry would have been right here. My TP would have been here. 17 pips is nothing. My stop loss slightly above this. And then boom, just like that. And it's that easy. All you need to do is just wait, look for the signals, and then take the moves. All I was waiting for was that I noticed that this was that last up move, and then I'm anticipating the drop, but I needed to stay below this guy. So once we closed on the 5 minute below this, my entry was there, and I was targeting here. So TP hit, I'm done for the day. We hit around 6:45 a.m. I'm cool with that. Let's let it play out on the hourly. Notice how it came back up. It hit this. Came back around 8 a.m. 8 a.m. I mean, I would have been out by now. So it came up. Notice how it did not hit this guy. It did remember how I was talking about it was going to do like a a liquidity run. This was about 10 pips. It did a 10 pip liquidity run and then dropped. But we've already been out the trade. We were out at freaking 6 a.m., 6:30 a.m. We were waiting for that drop. Got out. It's currently 4 p.m. 5, 6, 7, 8, 9, 10, 11, 12. It's 1 a.m., 2 a.m., 3 a.m. So let me clear this. It's 3 a.m. It's the time that I trade. Okay, we know it. Oh, actually, let me undo this. And then I'm gonna delete this. Delete this. And then I'm looking at the daily. So we know it goes and hit the target. We know it hits. It fills in our guy. It hit. This is our target here. But we're gonna look for a better entry because technically this is cheating. But we're gonna look to see where it got in at. So looking at the 4 hour, what do we see? We see this is the last down move. This is that last down move. Here's that boom right there. That's the 50%. So if we do get an aggressive run down here, we could get a nice buy up into this right here. This could be a nice potential 100 pip move if we do get a nice sell down there. Or we could just stay over here a little bit and play around in this area and just not go there. So let's go look at the 1 hour. I'm not seeing really anything besides the fact that we had this up move and then we had this drop down here. So once again, this is that 1 hour guy as well. The 1 hour 50% is also here. Let's see if we can see something on a 30-minute. So looking at this, here's that drop down here. So the 30-minute, the drop was down here to here. The 50% is there. But I noticed that this order block, this was here. This guy was here. This one right here. Here's that fair value gap of this last down move. Oh, exit.
Kind of be choking for a second there.
So if I was getting in on this trade, I would be looking for 5-minute entries. So I would go on a 5-minute. It's 4:05. It's 4:35. It might happen at 7, so I'm gonna wait. 5:15, 6. What I wanted to do is come into here. I'm not gonna get in the trade unless it comes down there. And I'm not taking this trade unless it comes down there. So it's about 6:15. $6.55. It's about 6:15, 6:55. It's 7:20. Price did not. It looks like all we did was we did a run on liquidity on the sell side, and we know this is a run on liquidity because we have this run from here to here. So these were the lows, and then price came, took it out by 8 pips. It's usually 10. It's usually 10 to 20 pips that they do a run on liquidity for, and then they just continue buying. Let's go back on the 5-minute chart. So we know this is no longer valid. So I can still get in on this 15-minute chart and still target my target up here. So this was that last down move. I saw that we closed above this. The main threshold we did. So my entry would have been here after this 7:15 move. Stop loss slightly under here, 12 pips. TP, I know we were going after this. So it's currently 8 a.m. 9, 10. Oh no, I'm counting in 5 minutes, but we're watching it. It's currently 9. So we want to hit our target before noon, just because it's better. There we go. So we hit our target around 9:30 a.m. This was a nice 4-to-1 move, and with only 20 pip stop loss. Honestly, my stop loss would have been skinnier than that. It would have been down here somewhere. Like, so when your entry, once you want your entry to be below the 50%. So slightly below the 50%, not too much. So when you get in on a 5 minute, you can really mess with like what you want your stop loss to be. So another successful trade, and it's only Wednesday. This was the 28th. So this was Thursday. I mean, we missed the trade on Wednesday. So we know that the low of the day actually started when here at 4 a.m. here. So I mean, I could have gotten in here too. I could have gotten in here. So if I would have saw this move and I saw it around 4 a.m. and then I saw this aggressive move. This is that last down move. Here's that 50%. My entry would have been where? At the 50%. My stop loss slightly under the body of this because I know the 50% is here. I could have honestly gone here too, but my stop loss is there. And then my target is up here. So, I mean, you would have, if you would have gotten in here, you could have capitalized off of it around 8 as well. So after that move, since that drop, boom, you could have waited for this move up and then gotten in here because I got in at the top and then caught it. So you would have 2 positions running for TP by the time you hit. So
Hey, Niche,
what's up?
I already get mom something.
Oh, you do? Okay.
And after she wanted to go pick up some rice for her.
I'll do it. No, African parents, man.
Because the store closed that stick, right?
All right. But yeah, so you would have gotten 2 entries off the 5 minute just because you understand where you're at. Yeah, you can come. You can slide Wednesday as well, bro. Because yeah, I'll be home. I'm off Wednesdays, so.
I was gonna say twice a week since I go back to Des Moines every 2 weekends.
Yeah.
So I'm going back to Des Moines next weekend to visit my family.
So
So I'll probably be over here
I mean, through this
after
week,
next Saturday.
I'm just gonna call it good because when Friday
Like every
was
2 weeks or so.
Friday was a bit aggressive on the news. So out of the 6 trades that we took, we missed 2 and we won what, 4? No, it was more than 6 trades. I think it was around 8. We missed 2 and we got hit. Stop loss hit 1, and then that means we won 5. Yeah. So we won 5, missed 2, and that's fine. I mean, that's okay. It happens. So you would have took 5 trades a week successfully. All right, Musa, drive safe, bro. But yeah, that's just the importance of just price action, and once you see it. So what we're anticipating. So let me just let this daily finish. Okay, so now we're here. So what am I anticipating for next week? So I like to go talk about the previous week and then we mark up what we anticipate for the next week. So here's same thing. Here's that price right here. We got this fair value gap right here. So here's that fair value gap. We do have this was that last down move before this buy. So this from this price to this price was fair value. So if I'm looking at this, I'm on a 4-hour. Once again, I don't trade Sundays. I'm gonna wait. If we do fill that fair value gap in on a daily, if we fill this daily 4-hour fair value gap in, there's a high probability we will be looking to run on these lows down here, and then we will be. So once we run on these lows, we will be targeting this fair value gap right here. So if we do hit this by Sunday night, I'm gonna be confident that we're targeting this fair value throughout the week. So I will be looking for entries and other stuff to target this guy because there's nothing stopping this move from going down, literally. Besides this guy here, we may get a touch here again. And then after that, it's just this guy here. But we may get a nice retest if we do break this. down here. So it's a nice 70 pip move. Still profitable. Let's look at the 4 hour. So this is that daily 4 hour fair value gap that I'm talking about. If we do fill that in, even look at this. Look what's here. Look at this guy right here. This was that last down move. Look at the fair value. Look at the gap right here too. It was never tested. It never came back. So we got a nice target for the week that we can fill in. I will not be getting in on Sundays because, I'm better than that. This is a nice 165 pip. I doubt it will fill in that much. We are currently at fair price. Let me see on the 1 hour, see if it's been filled in. Yeah, fair price has been filled in. So we'll see if we continue just long term. So, but if we do, let's say we just consolidate for some time here. If we just consolidate for some time, there's a fair value gap right here. We can just fill that in. I mean, the wick is the starting point to fill it in. Eventually it'll come to the wick, but once we hit that wick, there's a high % chance that we will continue and fill that in completely. That's when we will capitalize on the move and eventually come down to here. So we'll just be watching it daily and daily. That's for GJ. So I'm anticipating that sells for the GDPs. Let's look at the dollar real quick. So the dollar, we've been pretty bullish since January 6th, since the starting of the month. Let me get a break. I just spilled food on me. I'm such an idiot. Jeez, my cats will eat that. So January 6th, we were pretty bullish. This was what? Yeah, this was that true reversal day that I was talking about 2 weeks ago. When I was saying true reversals happen around Asian. So let's actually look at that. You guys are about to be blown away. So let's go look at that. So remember when I say true reversals start around Asian time. Actually this started around 7 a.m. New York. So I guess this one started around New York. But that was the low of the day. But this low of the day was, let me check this one out. Okay, this is what I was talking about. So Wednesday was a 6. We got in the low. And then the next day, oh no, it was still Wednesday. It was still Wednesday. I'm just trying to make sure. Yes, it was still Wednesday. So yeah, so Wednesday was in fact a true reversal day. The reason why you see it as 2 lows is because of the gap. So it gapped, started the new day and then started the low of the day. But yes, I was right. The true reversal days are like where the trend officially starts to reverse and go the opposite direction, start in Asian. So if you see the low of the day or the high of the day starting in Asian, you need to be like, oh, okay, so we're probably starting a true reversal day and we need to capitalize on that move. So if you know that, if you know the true reversal day starts Wednesday, starts Asian, you can start capitalizing for moves during London, like around 3 a.m. and all that other stuff, because you already know what you're expecting. So around, as soon as the market closed around 3 a.m. right here, boom, I would have just been looking for entries for longs because I already know it's going long. Honestly, would have held this. For a couple of days, probably a couple of weeks, because I know the true reversal started. I know it started here, and then the next day was here. So I would have gotten in here. I would just held this bad boy for a minute. Honestly, look at this. So we're up. It went up about. It came. This was January 18th. So January 18th was. Yeah, you could have held this for about 2 weeks almost. And that's literally just knowing the true reversal and what that means. So if you see that during London, so basically what I'm saying, and usually true reversals, I'm gonna give you guys another hint. True reversals start around Tuesday into Wednesdays. So usually Wednesday afternoons, like Asian is when true reversals start. So just a little food of thought. So if you start seeing something like that, you're like, okay. So let's go look at GJ actually. So Wednesday.
No taxes, no nothing. If you
Um,
buy this at Best Buy, it'll be like
January
600.
6th,
Yeah.
January
That's- I didn't
6th,
even know
or
that.
the 5th. When was that? That was January 6th.
Yeah, just letting you know it was that.
Yeah, it was Wednesday. So January 6th. Let me just clear this. January 6th was right here. Where's it at?
That's
Let me go on the daily first, and
straight
then
up my
look at
backpack
January
is so
6th.
light now because all I use are these two. That's
basically it.
That's lit on you.
Right here, 5th, 6th. Okay, from here to here. This is 6. This is 6 right here. So January 6th was this date right here. Let's go on the 1 hour. So the low of the day started around here, afternoon, so around 5 p.m. So same thing. It's the same thing. It started around Asian, and then you're looking at this, you're like, oh yeah, I'm about to capitalize off this move. And then you wait till, so I would have gotten in here, low key. You see this, you see him moving up. I would have gotten in here. My stop loss would have been slightly under this, the low of the day. Like 34, 30 pips or something. You could have held this for 2 weeks, honestly. You could have held this for 2 weeks till now. You could have ate off of this literally by just knowing when the true reversal day is. Literally. You would have been up like 380 something pips. And all you had to know was, oh, it's either continuing or it's a true reversal. So Wednesdays around that time, Wednesdays around that time is really important because if you start seeing the low of the day be created around around Asian time, you need to get ready for long-term moves, like where you're holding for days, because you're not going to be, you won't have to worry about things making the new highs or lows above that. So unless there's some insane news happening, you could honestly just hold your trade for weeks. And then if you're doing a 1 to 500 leverage and you're holding this for 2 weeks and you have, let's say you have $1,000 and you dropped a standard or something, or that's too risky. Let's say you dropped a 0.10 and you would have made $382. And remember how we were doing the math that if you had $1,000, you're averaging, if you take 10 trades a week, you're averaging about, you're making 300% more of what you were supposed to make in that month, because you're not even supposed to make 300. That's only if you're taking, I take 40 trades a month because I take 2 trades a day. I would just be capitalizing off this move while this guy is running up to my daily target. So I would just be capitalizing and eating off the move. But I just wanted to go over the week. The daily pairs. This let me go in the auto correct this. So what I'm expecting from the dollar, or what I'm hoping I would see, is that the dollar is actually continues. If the dollar continues bit bullish, I would like to see a run above this and then continue into this right here. So if the dollar does continue bullish, I would like to see it up to here. So we may see a nice run, and I do see a possibility of that because this is that up move. This is simply a retest. So if you envision it, like you just can picture it, you're like, okay, so this was that consolidation phase. Here's that order block. Where's the fair value? right there. It's got filled in. It got rejected, came up, and then it's getting tested one more time. So there is a possibility that if we do fill this guy in with the body of this guy, we will continue bearish into this territory here. So just food for thought. We could see possibility of us going down for the dollar. So, but the longs are there too. So, I mean, there's liquidity built up at the bottom right here. So definitely I can see both ways, but this does look more on the bullish side. There's liquidity built up here too. So definitely Sunday close, I would like to see this at least up here for me to have faith that the dollar is long, and I'm gonna short the hell out of GJ and GU. So, but yeah, so GJ is definitely overbought. I would like for it to come down. So yeah, if we do short it, we will be seeing short term. Like I was saying, we might see a nice 150 pip move to our target, and then we want to fill in this guy here. So, but yeah, that's the short term goal for now. But we might be selling for a couple of weeks because look at this. If we do sell for a couple of weeks, this could be a nice target down here. This guy right here. Here's this guy right here. I was spotting this guy from a while ago, but this could be a really nice target down here. This guy, if we do break all these lows, there's nothing stopping GJ from getting down here once we break these lows. So this is only 156 pips. This is a couple thousand. This is 790 pips. So we could see a nice run, maybe in the next 2 weeks or so, to the sell side. We'll see though, but yeah, I'm gonna end the call now just because I have things to do. But I'm glad I went over that risk management stuff because you can literally do that. You can risk $10 and still make 1,600 a month. You can still make 1,600 a month. Yeah, you're welcome, Dan. Well, I do have tomorrow we have some more 101s, so we'll continue that. But for now, I even do see this over here too. So we do see this target here. I missed this guy over here too. So this is a nice target too. Look at that gap. There was nothing stopped it. Nothing came and tested that. So I know this. If we run these lows, we're going down here. It's a nice 400 pip run. And then if we break these lows, we got this target here. So we got 2 targets that we could be targeting in the next two weeks to a month.
Is that what you do?
Yeah, I'll send you that spreadsheet. Can you send me your you're doing a $10,000 account thing, right? I can edit it for you and then send you it so you can. Okay, yeah. So I'll edit it for you and then send it to you, so you could use that as an example. All right, but yeah, thank you guys for coming. This is recorded, so I'll send it after we're done, after it's uploaded. But yeah, we're gonna be looking to go. I guess if the dollar's long, we're longing dollar. If it's shorting, we're shorting it. But we'll see what happens Sunday. But thank you guys.